Hi everyone, this is Paul Lange from DTS, and I want to introduce you to what you're about to watch. This is a 30-minute long impromptu event that actually went 37 minutes. Sorry about that. It was presented live to the free members of Discipline Trading Strategies. It's called Management, Bigger Concepts Using a Trade Example. And I'm going to do exactly what it says. I have a trade example. When I did it, I looked back and said, this is just such a simple concept on this particular trade. They're not all like this, but I want to show everybody the trades that you just can't mess up. If you enjoyed this, check out the many other full videos of educational events, articles, and Trade of the Week videos you can get access to by just visiting the DTS Free Stuff page. For now, sit back and enjoy this event. Hi, everybody. We will do a sound check 5 seconds early so we can get underway right away. Because I hadn't started yet. That's why I said we're starting at 4:59:59 and we're 5 seconds past that right now. Sound is good, everybody? I'm going to get right to it. Of course, the sound is good. We are all set, ready to go. Sometimes, I didn't send a special email, but like I said, every once in a while I'll tell you, this is kind of a dud, just being honest. And this is going to be a top 5 in 8 years at DTS, and it's just a free event. I think seminar people are going to appreciate this. This is a perfect thing because on one hand, it is high level for seminar people, and on the other hand, if you're not a seminar person, you're going to get a lot from it. I'll explain what I mean. It's exactly what it says, bigger picture concepts about management. And so much of management really is the bigger picture concept. Let's begin. Purpose of tonight, while this is not seminar level because the detail is not there, there's a huge concept in understanding what the proper structure and concepts are. I love the word structure. If you heard my podcasts, you probably heard me say structure, 72 times in 72 podcasts. Sometimes just hearing something a different way triggers an understanding. Seminar people are immersed in detail and maybe fail to see the forest for the trees. That's another saying I like a lot because I think it applies in trading sometimes. You get too caught up in the minutia, and sometimes you just got to say, hey, it's not that hard. Just do it. This applies to any time frame, long-term, or scalping. The concepts here, management, as in all of technical analysis, there's absolutely no difference. I know, of course, there's difference in the leverage you have, but I mean in terms of understanding charts, how to make money, technical analysis, a weekly chart is the same as a 5-minute chart. It just doesn't matter in terms of understanding what to do. And for that matter, a chart of Qualcomm is the same as the chart of a Forex pair, is the same as the chart of the futures. They're all the same. I know futures trade 24/7, blah, blah, blah. It doesn't matter. It's all the same thing to understand. Tools of the trade. If I were an artist, and boy, I'm the furthest thing from an artist, I can barely draw a stick figure properly. I can make a 3D cube, I can do that. But if I were an artist and we're going to teach you, I might sit you down for several hours and show you the brushes, teach you the strokes, right? There's different size brushes in art, right? Fine tip and wide brush and donkey hair and fine hair and streamline hair and curly hair and short handles, long handles, different kind of solvents, different kinds of paints. I could teach you all this stuff, right? I could teach you for hours. Would you be able to paint a painting afterwards? No, not even close, right? So the tools are the foundation. They're in a sense what you have to have, but that comes way short of understanding the technique, the procedure, what exactly to do. I look at tonight as kind of the same thing. A lot of trading is like that. I'm going to show you a whole lot of tools, a whole lot of things you have to understand, a whole lot of things. And I think it's going to raise your level of understanding if you're not a seminar person. It's going to raise your level of understanding tenfold. But there's going to be one little catch to the whole thing, and I'll get into that 100% in just a second here. I want to expand on this a little bit more. I had some notes to myself here and almost blew through them. This is based on just a trade that I want to show you. And you know why I call these impromptu events? Anybody know why I call them impromptu events? Anybody want to take a guess why they're called impromptu events? It's kind of a joke. because they're impromptu. It was literally the case. Monday, I did no big deal. It was no big deal trade. It's not a big winner. It's not anything. But I looked back at the chart and I said to myself, you'd have to be an idiot not to get it as far as I did. I mean, I think somebody in the room had mentioned, wow, great management, took it all the way to the high of the day. And I'm like, well, you'd have to be pretty stupid not to do it because some charts are just like freebies. I'm going to get into that. Some are tough. But I thought, what a great little presentation. Just say, hey, look at this. You can't screw this one up because if you do, you'll never make money. I mean, if you're a baseball player and the pitcher accidentally throws you a high inside fastball and that's what you love, you got to hit out of the park, right? If he goofs, you got to take advantage of it because the other pitches aren't going to be good. When you get a lob, when you get a softball pitch, you got to be able to hit it. It's the same thing in trading. When you get that, more than occasional, there's a lot of times it's easy. When you get the easy ones, you got to take advantage of them. So I'm going to tell you at some point on this trade, I'm going to say to you something like, well, I felt this had this size target because blah, blah, blah. And then you're going to think or ask, oh, is that the only thing that you look at? And I'm going to say, no, it's not. There's a whole list of things that you look at. That's what understanding technical analysis is. I'm later going to say, okay, I had to change my management policy here because blah, blah, blah. And you're going to say, oh, is blah, blah, blah the reason you change your management policy? And I'm going to say, well, no, it wasn't this case, but there's a whole list of things that you have to understand. Do you understand what I'm saying, everybody? That's what an example is, right? It's showing you an instance of something, but it doesn't mean that that is the answer to everything in the world, right? Management is what makes you a trader, period. I have all kinds of sayings about this that I've come up with over the years, but simply your management will make you or break you as a trader, period. I've seen all kinds of traders that are good at reading charts, and yet they can fail to make money, and the reason is management. Now, be careful what I said there. I'm not saying that once you learn how to read a chart, you're going to fail anyhow. What I'm saying is people that do fail, even after understanding a chart, it's always management is the issue. At DTS, management applies to the entry, to the stop, and from getting to point A to B. I say that because most people only acknowledge management as getting from point A to point B. To me, the biggest money-making concepts that are actually not that difficult to learn involve managing entries and exits. Managing point A to B is hard. Managing entries and exits is actually not that hard. It's the biggest money-making thing you can learn to do. Tonight is about managing from point A to point B. Just want to show you this trade and how it got from point A to point B and what general concepts are used. Sometimes it's easy, sometimes it's not. But it's impossible if you are clueless. Even easy charts are hard if you are clueless. Management starts with knowing the charts. Some trades are tough and some trades are easy. You just can't help that. There are charts that I'm going to struggle with. There are charts, especially in management, especially in targets. If it helps any of you at all, let me say this. I'm terrible at taking targets, at hitting. I'm just terrible. I take a target early and it goes 7 times past where I thought it was going to go. And then I decide to hang on for one and I give back half my profits. Does that make you feel any better? Nobody's going to be great at targets. Now, I'm great at entries. I'm great at stops, but nobody can tell you they're great at targets because it's not, and I don't care if you're scalping or if you're long term or if you're going for home runs, whatever it is, it's hard to be great because that's a variable that's just totally unknown. We always get our entry and our stop. Eventually we get it down to the penny. You have to, right? But at the time you enter the trade, the target is never something to the penny. It's not even close. It's just this kind of vague area out there. But when you do have the easy charts, whether it's strategically, you just had a slam dunk, or if you had a management slam dunk, you have to take full advantage of those because that's where you make your money. The tough ones are going to be tough. You're going to lose a little money, maybe you make a little money, but it's those easy ones you have to put in the bank. Does that make sense, everybody? Why do I stress that so much? Because a typical trader will screw up the tough ones and you got to say, okay, that's going to happen. But then the easy ones, they make peanuts. Does this sound familiar to anybody? I've seen that in the room with people where they are, air quote, following me. But what they do is anything that I take a loss on, they're there for the full loss plus some. And then anytime I get a nice target, they got a fourth of that target, right? Because, I'm going to draw on the screen here a minute. You take a trade, and whether you're following me or doing it yourself, or it doesn't really matter, you take a trade and it stops, so you're down 1, right? You take another trade and it's a partial stop, so you're down a half, so now you're down 1.5, right? The next trade you get into works, and it should be maybe a triple, a 3R trade, and you're up about 1.5, and what do, everybody? Everyone does it. What do? You're down 1.5 for the day. You close it out because now you got your money back, you're back to break even, and now you can start over. Let me flip the script on you and tell you what that really means. You know what that means? It means that you are, listen to the words carefully, it means that you are actually now trying to break even. That's your goal. Your goal is to break even because whenever you lose, your goal is just to get your money back. Whereas there may be nothing wrong with having 2 stops because the next trade is going to be a 3-hour trade, and now you're up 1.5 hours for the day. That's the way it's supposed to go. But that's not how most people handle it. Question number 1. I'm about to go on a vacation. Everybody answer as quickly as you can. There's a prize for the person who gets the right answer. How should I get there? What mode of transportation should I take on my vacation? If you're a seminar person, give everyone else a chance, because I do this in the seminar program. Fastest way possible? Is that always the best thing? I'm not sure. Run. How do I get there? Plane, train, car, bike, automobile, boat, enjoyable way? Well, you see the purpose of the question, and obviously it sounds a little silly, but that's the point of it. It is kind of silly, because if you don't know where you're going, you have no way of knowing how to get there, right? In life, everybody says, well, of course, that's silly. But put it on a chart, and all of a sudden everybody's totally lost. It's the same thing on a chart, right? If you have no clue where realistically your target should be, how can you even begin to manage the trade? Make sense? By the way, if you ever have a light bulb moment tonight, I love it if you type it on the screen, a little LB or something. Does that make sense though? People, just the first starting block is to say that in order to manage anything, you have to know your destination. You have to know where you're going, because that's going to determine all the tools you're going to use, the charts you're going to use, the tools you're going to use, and what process you're going to use along the way. By the way, this is such a big deal to me that those of you in the seminar program know that out of the 3 full-day courses, 1 whole course is devoted to management, right? Right, Mark? 1 whole course, MAT. And by the way, is that kind of a snoozer course, Mark, or are you just completely blown away and overfilled with information? Yeah, it's a complete blow away thing. So my point is simply is that there is a lot of information to take in. None of it is difficult. None of it requires more than a 5th grade education. But the question is, have you really learned all these concepts, all these tools that will help you better to make money? One of the most common questions traders ask is about targets and management, and the truth is these things are hard to do well if you don't really understand the chart you're looking at, when you don't know the bigger picture suggests or how the time frame fits together, how the time frames fit together. It's almost impossible to have confidence in where something may go. That's why so many traders sell early on good ideas or get shaken out on trades that eventually run. I think some of you are saying, yeah, I understand that totally. Let me get something out of the way here, because I've probably alluded to it a couple times already, and some of you that don't know me may be saying, hey, Paul, sounds like you're trying to encourage people to take a seminar program. And I sure as heck am, and I don't care if it's with me or not. I could care less if it's with me or not, I really could. I'm here to try and help everybody and to show you what I can here at these events, and to tell you that I don't think there's any way you're ever going to learn to be a good trader without getting an education. So if you know somebody, if you have someone else you like, if you like me, you're going to do it here, that's great. But absolutely no hose barred. I don't think there's any other way to do it. I'm proud of all my seminar people. I think you ought to do it. So I'm here to say that, and I'm not saying these quotes like this to talk anybody into doing anything. It's just because it's like anything in the world. You know, knowledge is necessary to build upon, to make money, or to do whatever you're going to do. You can't just step into, you know, billions and billions and billions of dollars changes hands every day in the stock market. And people just step up to it like it's nothing and just get blown away all the time, and they just can't figure out why. All right, some essentials to know. So what is the zip code of the target? The reason I stopped there was because I thought it was important as I read through these slides. I said, hey, this is the question of the week. And before I give you the answer, I thought I would just bring it up, and maybe even, since I don't get a chance to do this and not everybody replies to these, here's the question of the week you got this morning. You'll get it again tomorrow morning, and then you get the answer on Friday. A good trader should always have firm, fixed target in mind before taking a trade. True or false? And you know, if you put an answer out there, you're subject to, well, if you can always adjust, it kind of is the opposite of a firm, fixed target, KP. You can't. You need to have something that never changes. I'll take that because I could always change it. You can't change it. You should not be divided. It's a little bit tells me if you were to go through MAT, you would hear me answer this question about 72 times. That is absolutely positively false. Anybody that tells you this is true doesn't know how to trade. They're not really trading. It doesn't even make sense to say that this is true. Sorry if you said true. But it depends on so many variables. And one of the very first things is how you get there, right? How you get there makes all the difference in the world. And you can not hold to any firm target. There is no such thing as a firm target. All we ever have are zip codes. And that's why I stopped there to do that. There's zip codes, meaning there's just big general areas. Let me do that again. When we find some kind of trade, we end up finding our entry to the penny. There's different ways you can find your entry and blah, blah, blah. But eventually we find it to the penny, and we usually designate a stop to the penny, and there they are in stone. The target, here's the target. There it is. There's the zip code. It's the city of Devlin, New Hampshire. There it is. That's the zip code. That's all we know. And the point simply is that it's kind of like the red zone in football, right? Those of you football fans. Well, when you get to the red zone, everything changes because there's no longer deep receivers. Everything changes. So when we're coming along here and I start going, initially there's a certain management concept in the beginning of the trade, and then there's another management concept, and then we get in the red zone here, and guess what? The management concept changes because we are now in the red zone, so to speak, right? So the zip code, though, however, requires great knowledge of charts, or else you try for unachievable targets, or you leave too much on the table. What is the trade duration? Is it a scalp trade, day trade, swing trade, core, long term? You can't manage swing trades on a 5-minute chart. Tools of management. You can hit a target or choose multiple targets or choose various method of trailing. Trailing means that you are basically just raising stops to protect profits. Any of these must match the goals above and where you are in relation to a target, right? And all that means simply in just the most basic kindergarten sense is that when you first get in a trade, your management policy here ought to be, should be, absolutely must be much different than your management policy when you're here. Does that make sense? Again, we're talking big concepts. Does that make sense, everybody? But some of these big concepts maybe help you if you're trying to develop your own plan, or if you're not trained, or if you're trying to learn. And for you seminar people, maybe just kind of going through this from looking at the forest, not the trees, is something that's helpful sometimes. You seminar people have heard all this in one form or another, but being kind of a top-down view, maybe this helps somewhat. So the first one was some essentials you have to know, and there's others, but these are just some of the key ones that you have to know before you begin managing a trade, right? You can't just start managing without knowing what you're doing. And again, I don't care what time frame you're on. I don't care if you're scalping. I don't care if you are long-term on weekly charts. There's a certain policy that has to happen if you're going to make money. Maybe want to know other management considerations. It may be advantageous to call out or manage a trade to take another. So this may factor into it too, believe it or not. You may be saying, Paul, what are you talking about? Every trade is unique. Well, besides managing a trade, you're also managing your account, so to speak. And again, I don't care if you're long-term. Your account may be filling up, and you may have a trade that's stale, and you decide to trade your management on it to open it for something else. As a day trader, I do this all the time. I kind of don't want more than 2 positions open that are in a chance of being stopped out fully. I may sometimes do it, but generally I don't want that. So what can happen is, if you think about it, let's say I have two trades going on, and I see this third trade over here that I just love, and I'm going, oh man, I really shouldn't get in this. But then I look at this and I go, you know what? This trade here just did something where I normally maybe wouldn't raise the stop, but if I raise the stop to here, it's at least slightly green, and now I can take this trade, and maybe this trade turns out to be the home run of the day, which I would have had to pass if I didn't alter my bigger management, money management concept, not trade management. Does that make sense, everybody? And some of you probably never have thought of this, but it's a big deal. I have sat there sometimes very frustrated where that next trade was the home run trade. It was the home run trade, and I didn't do it because I'm following some strict money management guidelines, or just was in that spot where I'm saying I can't do another one. And something done a little bit differently, or if I was able to manage differently, sometimes that next trade is the home run trade you want to do. So there are also, again, there's some other things maybe you want to know to incorporate in your management. Just giving you some examples of a couple things. What does not matter in management? What your entry was. Is that true or not? Yes. Is that true or not? True? Yes? That it simply doesn't matter where your entry was in terms of what your target is. I've had people argue this one. Yeah, and it kind of goes along with the second one, right? It doesn't matter what you think the right reward to risk ratio is. Simply doesn't matter. If you ever have anybody tell you that you have to have the 3-to-1 or that you have to have a fixed target, These are people that are just teaching off the internet that don't even trade for themselves, or at least don't make any money. Those are ridiculous concepts. You don't have to have a fixed reward to ratio ahead of time. It's too long to get into it right here. It doesn't matter what your entry was. Yeah, it may means you don't make money, or it may means you stop out, it may means you did a terrible job, but it doesn't change what the target is. I mean, there is a stock you're about to enter, let's say is a long, right? And somewhere in here you're going to have an entry, and somewhere in here you're going to have your stop. Up here somewhere is going to be the high of the day, right? If you could have a crystal ball and look forward, there's the high of the day, right? There it is. That's not going to change. The chart does not change based on what you did. So if you got in here with a stop here, you're going to have a 3-to-1 trade. If you got in here with your stop down here, you're going to have less than a 1-to-1 trade, right? Obviously, I know. I've had to argue this with people. So my point is that you can't get in late, because this is what people do. They say, I have to have a 3-to-1 trade because that's what I was taught. So they'll get in late, and then they'll like triple this amount and say, there's my target. My target is 3 times my stop. That's asinine trading. That doesn't even make sense. So just making the point, what does not matter, your entry simply doesn't matter, your reward ratio you expect does not matter in terms of where the target is. These things obviously are hugely important, but they have no bearing on what you're picking as your target. It doesn't matter if you're up or down for the month, day, or year. This is something I put in here just because a lot of times people, if they're down, they suddenly think they are expected a big target, they're due a big target, that the market owes them something. It doesn't work that way, right? That's right, you don't control the chart. But it's obvious that's true, but do you really think that way when you're trading? Because I see a lot of people that don't, which of course is sad if that's what it is. So the example, I want to go through all that headway first. Here's an example. This is ACN long from Monday. And this is the trade when it's done. I look back at the chart, I said, wow, my dog could have done this, honestly. So what we're going to have here is, here's the big picture. It gapped up this day. It gapped to right there. I'm showing you just where it gapped to. I'm not showing you. This is on Monday, so we already have 3 daily bars since then. And the question that you have to start thinking about is, when you see this and it appeals to you as a strategy, and again, I'm not getting into if you like the strategy, if there's a strategy, what is it? I'm just saying, hey, here's something I felt in my world of trading. This was my number one thing to look at this day. But there's a lot of things I have to consider. What is the strategy? What time frames are going to be in play? In other words, if I take this as a day trade, what are my expectations for targets? Are they to the prior day's high up in here? Are they going to be to the 200 period move? By the way, when I'm taking this trade long, if I'm taking this trade long, and whether it's a swing trade, a long-term trade, or a day trade, that's the 200 moving average. How much does that downtrending 200 period moving average figure into your calculations about taking this trade or the target? From 0 to 100%. 0, not at all. 100%, yes, that means everything. 50%, yeah, boy, I really consider that. How much does that figure into your calculation in terms of this is a good or bad strategy, and or I gotta temper my target because of that? Yeah, good. Yeah, 0. Absolutely, positively 0, nothing. Not even 0.1%. It's not even relevant. I don't even see it, to be honest with you. I only brought it up because I'm seeing it now. Depends on the strategy. It depends. You're right. The sweet spot would be the 20 above the 40, above the slightly rising 200. But I am never going to discount any trade that looks like this because there's other strategies involved that will make it a moot point. What do you need to see to enter this? What is your expected hold time? What time frame are you going to use to manage? After the entry, later in the trade, what are the tools that you're going to use to manage? So that's the daily chart on Monday. Here's the daily chart over here, now very small, just so you can see it and keep it in mind. And here's the 5-minute chart. So here we go. Boom. Now, for me, based on a whole lot of things, the type of strategy was, the type of gap was, everything else, I needed some kind of a little bit of confirmation of moving higher. My entry, as I look back at it, I think was a little bit sketchy, kind of caught in the middle type of entry. There's entries I do where I get in right here, and you can see the numbers up here. Entry 253.01 at 9:32. So 2 minutes into the day, we kind of fell really quickly and then flipped around and went higher. Entry to me, and again, this is no home run trade. It only made about 1.2 hours. Actually, both exits end up being almost the same, coincidentally. And part of the reason was because I felt the entry was a little compromised. I didn't do the exact entry I wanted to do. I kind of had to go on strength, not necessarily on weakness. So the entry wasn't fantastic. So because of that, I gave it a little extra room. But while I don't love the entry that much, I took my first target here. Now, I don't think I would have faulted anybody for taking it here, but this is what we call a 5-minute power trend. In other words, it is so tight, so precise that there's no dips, there's no pullbacks, there's no pivots, there's nothing but bar after bar higher. So there's one, there's one. Now to see this a little bit better, I'm going to show you, the next slide is a 2-minute chart. So here's the 2-minute chart. So again, we're opening right there, and now you can see the whole, the daily chart worked. It's 3 days straight vertical. So my first concept is, well, what are my expectations for this chart? Well, my expectations are, it theoretically is a swing trade, right? So that means as a day trade, my goal is kind of end of day, unless something steps in to supersede that. We had a 2-minute chart here that was literally a power trend. And this is what I meant about my dog could manage this. How could you get out of this, at least between here and there? How could you even get out of that, even if you're the worst trader in the world? And this is what kind of generated this talk for me, right? Because if you're going to get out of this down here or something, you're never going to make money, because this is the easy trade. This is the piece of cake. This is the one that's just kind of free money people are handing you, and you got to take all you can, because they're all not like this. Do you see my point, right? If you have a trade like this and you get out before this, now here I can understand getting out. Why didn't I get out there? It could have turned out to be a mistake. I'm not a fortune teller, but why didn't I get out there? Now, I hadn't walked away this day, Neil. I don't think I did, or at least even if I did, I entered inside this. I entered somewhere inside that second candle. The exact minutia for why I entered is not visible on the 2-minute chart. No, I'm not a good manager necessarily, Gary, but it's part of what I'm discussing tonight, right? I had a larger target, exactly. This is theoretically a swing trade, right? I mean, it should go end of day, which it did. So this is not even 10:30 in the morning, right? So I made the decision that if it kept going much more, maybe I would take my first half, but I decided to let it pull back one time. Because here's the great thing: when it starts pulling back, part of you is sick, right? Because you're saying, man, I could have had all that. But here's the great thing, is if it turns the corner, guess what you get to do? Once you're up here, guess what I get to do then, everybody? I didn't add on this one. I could have, Mark, I probably should have, but I at least get to raise the stop. And now this whole thing is in the money, at least a half day's profit, a half day's goal, right? And now it's like, now who cares? Now if you're sitting here staring at it, you got a problem. So now the only reason I ended up peeling out half here, again, a rule, a tool that I use that I understand, acceleration to the point through here and coming over this high with the widest bar on the chart, I decided time to take it. So I took half there, and then the other half was designated for end of the day. Now you don't see the exit on the 2-minute chart on the second half, but it was just simply based on the right here. I mean, this is just, you don't even have to be much of a good trader to figure this out. I mean, barely a new high, a lower high, and a square top. And then once I took out that pivot, then I just got out there. It turned out to be the right decision. It didn't fall, but it didn't go any higher. So it turned out to be the right decision. So when I look back at this, and I'm not saying it to brag, I screw up. I mean, it's just absolutely perfect management, right? This is an easy chart. Anybody could have managed this. Anybody should have managed it this well. With the exception, if you got out here, I wouldn't yell at you really, but I mean, it's just a perfect chart. It's kind of the point of this, why I want to show it. And then guess what happens when a chart like this shows up for you and you love it as a favorite thing, and then it proves to be right. Guess what you do the next day? Now, when I set up this event for tonight, it was before Tuesday when I got it set up. But guess what happened on Tuesday? Tuesday, December 2nd, the next day. Well, the next day it opens flat, and this is my favorite trade for the day again. Yeah, rinse and repeat, exactly right. And it just so happened to cooperate, right? The fear is, of course, on a stock like this is that if you don't hold it, day two as a day trader, it maybe takes off without you. Why didn't I jump in here? I don't know, I maybe could have. I generally don't do that because generally speaking, when you have a big day up on one day, the next day any morning pop's going to be profit taking. So I expected it would pull back. What if it didn't pull back? The daily itself was garbage without a gap. The daily was garbage. It gapped though and cleared almost everything. What if this though? Here's an important thing, especially those of you listening to some of my podcasts recently. Here's an important thing. What if it just never came back from there? What if it just, that opening green bar was it? What if it never came back? What if it never came back? Yeah, then I miss it. Right, exactly. And that's the decision you have to make as a trader on some of these is, how do I feel if I sit back and I miss it? Or how do I feel if I take it and it stops out? Now, if you took it, I don't think you would have lost money because they had a nice pop. But I ended up waiting, and it came down for me. And this ended up being the only trade I did this day, by the way. And it made more money on day 2 than it did on day 1. Why did it make more money on day 2 than on day 1 when the daily bar was even smaller? I don't like using the word smaller stop. Yeah, better entry is a better choice of words. And even better than that is just more precision. There's more precision afforded this day. Because the day you gap, things are crazy, right? Everything's blowing up all over the place and you're not quite sure. The day you gap up, you have no parameters, right? It's a new world and you don't know. Here on day 2, I have all the support from the prior day. You can't really see it on this chart, but I have all the support from the prior day. So once I'm down in here, I'm like, la-di-da, I know what I'm doing down here. So I got in, where'd I get in here? So I got in there, and actually I got in on the way down. So back to the focus on management here. So jump in there, and stop, blah, blah, blah. Oh, target. Took all target right here. And the same exact thing, this turned out to be such a neat thing, because when I decided to do this, I was just on day 1. But look at this chart again, right? So I got in here, my stop is down here somewhere, boom, and then look at this. Just how could you not stay in it to exactly where I get in? And again, this is perfect management. There is an absolute policy to get out right there, and this is really perfect management. Had I known that this was a target area, I would have been out sooner than this. I gave back a little bit here, but here's the trade-off. If I would have done that here, I would have lost money, right? In other words, if I would have tried to get out the top, I would have lost. If I would try to get out the top here, I would have lost a lot of money. So the balance always becomes, well, all right, you let it pull back once, and then maybe you shoot to a new high. So it's that same balancing act all the time. How close are we to the final target? And the problem is on a daily chart like this, look at this daily chart, there is no concept of a target. None whatsoever. There's nothing that you have as a gauge. You're just flying out there in blue sky. So all you're doing is looking at the intraday chart. So the standard thing would be, and I think most of you recognize, this would be a standard exit for this particular chart, either there or right there, one or the other. And it turned out to be good because it never really went higher. It ended up closing right where it was. Some patterns behave well, some don't. And sometimes buyers and sellers battle it out in a way that makes management difficult no matter what you do. But occasionally everything lines up. A helpful higher time frame, a clean initial move, a controlled pattern where one side is clearly in charge. When that happens, the trade tends to be straightforward. I want to point out again that none of this understanding is possible without really understanding how to read a chart, how the 4 time frames interact, what it is exactly you look for, all the essentials of this, because all of this stuff that you need to look at, it all involves really having a good A+ understanding of charts. I call it the language of charts. Are there any questions? Couple reminders on the free stuff page at the top. I have a little quick 10-minute video about the possibility of the PD2 rule being abolished. I keep mentioning this because I think it's going to be a big deal. That's the pattern day trader rule. Those of you that are locked out of day trading because of $25,000 minimum account needed, that may be abolished by the end of next year, by the end of this year, beginning of next year somewhere. I'm not going to drop the link in there, but you can go to the free stuff page and find it. And also want to remind you that this weekend is the next seminar cycle starting up. The next 3 Saturdays or the next 3 live courses. Kind of squeezed it in here between Thanksgiving and Christmas because they're unusually close this year for whatever reason. Price of the seminar program does go up next year. There's some emails about that, so hopefully you saw that and aware of that. And even if you're not attending the seminar program, which is a paid-for event, make sure you come to the Introduction to Mastering Technical Analysis class. That is going to be this Friday. You'll receive some emails about that, probably starting, well, you already got one. You should have right now. When you're managing your account from a max loss perspective, you're not doing that for math reasons, but rather for personal reasons, correct? I don't understand the question, Eric, which is unusual for you because you use probably it's me. It's me. It's not you. There's two things. You have chart management and you have money management, right? Chart management is the charts, what I talked about most of the night. Then there's money management. Money management says that if I'm in 4 losing trades, I'm not going to take a fifth or whatever it is that you dictate, right? So I was just making the point that if you can bend your chart management rules a little bit, it may be worthwhile. It may be what you would normally do, but it may be worthwhile even if you mess up the management on that one a little bit. It may introduce a new trade that is worthwhile to you. So with that being said, I don't know if I even came close to answering your question. What do you mean by math reasons, by personal reasons? I mean, your personal reasons are math reasons. You're going to limit losses, limit max possible loss, limit max extension on swing trades, on long-term trades, max possible intraday loss at any moment in time. Even if you have a max day trading loss rule, I don't want to hit it the opening half hour. I kind of want to save a bullet, as I always say in the room, so that if I don't get the open right, I can come back and maybe get one later. Oh, no, 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 no. Well, no, you should have some money management rules set up, Eric, yes, and they are mostly personal, but they may be indirectly based on math. In other words, some people would say that you shouldn't lose more than 1% of your account in a day or whatever it is as a day trader. So I mean, maybe there's some guideline, but there's no firm math guideline, no, because everyone's different. Your day trading account may be 1% of your total assets, and for somebody else, they took a second mortgage to have a day trading account. So there's no firm math number, but indirectly it could be based on math, sure. Why cap a day's loss at all? Because problems start from excessive losses in any single trade or any single day, because you start a downward spiral that makes it hard to climb out of. You want to be able, there's a saying, Jim, you always want to be able to come back and trade the next day. You want to be able, whatever you did today, if you messed up, you want to be able to erase it in the next couple of days, and you want to come back. So you don't want to dig a hole in a single day that you're climbing out of for 2 weeks, because you know what happens? You tend to trade differently. You tend to not do well, and you tend to try to go for home runs that don't exist, and you start trading poorly. It's what I call a downward spiral. So limiting any single day from having a big loss, which would probably involve also limiting any single trade from being a huge loss, is a good policy to follow in general. Any other questions? As usual, I hope you enjoyed this. I did go over on this one. Even the cut down version is going to be about 40 minutes, but I always promised 30 minutes. I broke my promise on this one. Remember on some of these impromptus, they're not recorded. I think this one will have recordings sent out for it. So, all right, buddy. I'll see you all Friday for what's on the screen, right, for the intro class. All right, buddy. See you on Friday. If you're in the trading room, I'll see you tomorrow. Take care, everyone.